I got to ask you about bonds. You run a suite of bond ETFs as well. Fallen Angels High Yield Fund ETF, floating rates. You have a high yield muni. I had you on at some point last year, and I forget when. You were very big on bonds, and you hated commodities. And you seem to have flipped around here. You're big on commodities now, and you don't like bonds. I mean, what's the issue?
I totally
here?
flipped. Yeah, that was exactly that conversation. And I think because of fiscal spending, I know everyone knows this fact, but the risk is to investors that it's not priced into the market yet. And that's why I think you need a gold hedge to that, but it's also a reason I think interest rates could go higher. So in your fixed income portfolio, go where the yield is, short term, and don't do the duration risk. Yeah, I don't think that's worth it. And remember, like
So everybody's advising don't go out on the middle part of the duration, 5 years, for example, middle part of the curve, rather than the short end of the curve.
I would not right now. If I'm right about this fiscal budget deficits, because if the market gets worried, it's not. Gold is signaling it, and I would argue other things are signaling. We don't have time for that.
So for rates to go up, you don't necessarily, you seem implying, you don't necessarily have to have the Federal Reserve suddenly raises rates and makes a policy mistake.
The Fed doesn't control the 10-year.
Yeah.
Right? They only control the short end. And if investors around the world are saying, U.S., you're spending too much money, and the only way you get out of that debt problem,
how would
like
they manifest that
country,
displeasure?
Is inflation.
You could have a series of failed Treasury auctions that would drive rates higher. So, you could have a debt downgrade.
So credit.
I'm trying to figure out how do you get to this concern.
So credit default swaps, right, is the risk of U.S. defaulting on its debt. It went up during the financial crisis. It spiked last year. Remember when we had that budget standoff? It's still at high levels. Now, not as high as the financial crisis, but maybe let's call it half as high. So that is another indicator. It's like, well, that risk is not out of the market.
Yeah.
The last thing I look at, Bob, is EM local currency bonds against U.S. Treasuries. U.S. local currency bonds have been outperforming Treasuries consistently over the last 3 years, which is like, that makes no sense because the dollar's been strong, but government bonds have not been great. I mean, there's the duration issue, that hurt them, but they're getting re-rated.
We got to go, but I'd be remiss if I didn't ask you about Bitcoin. You're one of the 9 new Bitcoin ETFs out there. HODL, folks, Get it? HODL.
Yeah.
That's very Jan von Ecke, by the way. Did you come up with that?
It's a long story, but
all right,
we got it.
Go ahead. So go ahead, give us some thoughts. Flows have been good.
So a year ago, I was pounding the table on gold and Bitcoin. Now I'm like, no, pound the table, but we're in a bull market, which means expect corrections of 20-25%. I would buy the dips. I think we are in a bull market for gold and Bitcoin. If you don't own it, buy on dips. Keep that part of your portfolio.
Mike, what are you telling people about Bitcoin and Bitcoin ETFs?
Yes, I mean, the flows have been impressive. And I think part of the outflows in gold this year, so just broadly in gold ETFs, can be due to the launch of the spot Bitcoin ETFs. I do think there's some people pairing a little bit of their gold exposure with the new crypto spot price products out there in the marketplace. And I think that's pretty evident in that first month of flows that we saw. Crypto, broadly speaking, I'm not ready to call it a safe haven asset yet. So I believe it's, if you just look at it, it's still more of a speculative asset class. It doesn't say I don't think it can get there. I'm not an expert in this space, so I really kind of just keep my opinions to myself. But I do think that it's hard to think of it as a safe haven asset when, it's generally speaking trading at a significantly high beta to broad equity markets, especially risky equity markets. It's hard to think of it that way, at least in the short and intermediate term.
Yeah, I find it hard to believe. It's a speculative. It moves along with like Kathy Wood's ARK fund. It's a sort of a speculative investment, wouldn't you say?
I don't think so. I mean, Bitcoin and gold both hit all-time highs this year. So they don't correlate super highly, but they follow the same macro forces. I mean, Bitcoin's got other things going on. It's got a tech element. It's also evolving as an asset. So anyway,
we're not going to get into Bitcoin right now. I've said my piece on Bitcoin. I've said my piece on blockchain. Big blockchain bull. Bitcoin, not so much, but that's all right. Not time for that. As always, wide-ranging discussion. I've known this guy a long time. That's why I keep having him on. He knows a lot about a lot of things.